Hello traders, welcome back to my YouTube channel. So today I'm going to share a live intraday 5-minute scalping price action trading strategy. But before we start, we need to understand price action trading patterns. Key takeaways. An ascending channel is used in technical analysis to show an uptrend in a security's price. It is formed from two positive sloping trend lines drawn above and below a price series depicting resistance and support levels, respectively. Channels are used commonly in technical analysis to confirm trends and identify breakouts and reversals. What is an ascending channel? An ascending channel is the price action contained between upward sloping parallel lines. Higher highs and higher lows characterize this price pattern. Technical analysts construct an ascending channel by drawing a lower trend line that connects the swing lows, and an upper channel line that joins the swing highs. The pattern's opposite counterpart is the descending channel. Ascending channel patterns or rising channels are short-term bullish in that a stock moves higher within an ascending channel, but these patterns often form within longer-term downtrends as continuation patterns. The ascending channel pattern is often followed by lower prices, but only after a downside penetration of the lower trend line. The stock will continue channeling upward until it is able to break either the upper or lower trend line. An upside break is bullish, while a downside break is bearish. Understanding ascending channels. Within an ascending channel, price does not always remain entirely contained within the pattern's parallel lines but instead shows areas of support and resistance that traders can use to set stop-loss orders and profit targets. A breakout above an ascending channel can signal a continuation of the move higher, while a breakdown below an ascending channel can indicate a possible trend change. Ascending channels show a clearly defined uptrend. Traders can swing trade between the pattern's support and resistance levels or trade in the direction of a breakout or breakdown. Breakout expectation. Channeling stocks within ascending channels are only able to reverse course with the downside penetration of the primary ascending trend line. The intensity of this breakout, the duration of the channel, and the width of the channel will determine how far a breakout may carry. An upside breakout from an ascending channel indicates a higher intensity of buying, and is a technical buy signal. A downside breakout from an ascending channel indicates lower prices to come, and is a technical sell signal. We open a USD/CAD asset 5-minute time frame, and draw trendline channel as well as zone area to understand market movements. Here you will see that candle got rejection through the trend line as well as zone area and a dark cloud cover candlestick pattern formed. So now we have almost 3 confirmations. First confirmation is candle got rejection through the trend line. Second confirmation is candle got rejection through zone area. Third confirmation is we got a dark cloud cover candle. So, after 3 solid confirmation, here we place a sell trade. Envelope channels are another popular channel formation that can incorporate both descending and ascending channel patterns. Envelope channels are typically used to chart and analyze a security's price movement over a longer period of time, whereas ascending and descending channels can be beneficial for charting a security's price immediately after a reversal. Trend lines can be based on moving averages or highs and lows over specified intervals. 2 of the most common envelope channels include Bollinger Bands and Donchian channels. We won this live trade. Swing trading is a trading technique that traders use to buy and sell stocks when indicators point to an upward, positive, or downward, negative, trend in the future, which can range from overnight to a few weeks. Swing trades aim to capitalize on buying and selling the interim lows and highs within a larger overall trend. Traders use technical indicators to determine if specific stocks possess momentum and the best time to buy or sell. To exploit the opportunities, the traders must act quickly to increase their chances of making a profit in the short term. Key takeaways. Trend traders generally trade up or down trends, with trades lasting upwards of months. Swing traders generally trade within ranges, buying at support levels and selling at resistance levels. Their trades usually last for the short term. Trend traders tend to focus on broader economic news, while swing traders focus on short-term price changes. Relative to trend traders, swing traders trade more frequently and for a shorter time period, while also taking larger positions and being more precise with their position timing. Financial markets are enormously complex, but most trading strategies tend to fall into one of two categories: trend following or swing trading. Each strategy has its advantages and disadvantages, as well as specific requirements that investors must follow consistently in order to avoid errors. However, many investors randomly apply these contrary strategies without understanding how that can undermine profitability. Identify whether you are a trend trader or a swing trader in order to hone your strategy correctly. Trends and swings. In theory, the trend trader takes a risk in an uptrend or downtrend, staying positioned until the trend changes. In contrast, the swing trader works within the boundaries of range-bound markets, buying at support and selling at resistance. Swing trading tends to work best for shorter time frames, while trend-following strategies can be applied for months. However, the lines have blurred in recent decades due to the availability of real-time charting for all time intervals. Which one fits your style? New and intermediate traders should choose one of these disciplines early in their market educations and stick with it until mastered or until they find out they are better suited to the other approach. Experienced traders can mix and match these strategies at will, often building highly effective hybrids that require strong discipline but produce excellent bottom-line results. This dual effort works best for those with strong multitasking skills who can contain each strategy within its proper boundaries while adjusting risk management to address the unique characteristics of hybrid strategies. For example, typical long-side swing trades require fast exits at resistance such as old highs, while trend followers sit on their hands and allow securities to test and break those levels. A hybrid approach might be to sell half the position at resistance, keeping the other half in hope of a breakout. Swing traders and trend traders execute market timing strategies that require different skill sets. While experienced players can successfully mix and match these strategies, new and intermediate traders should focus on one approach and stick with it until fully mastered. We open USD JPY asset 5-minute time frame and draw zone area to know the market movements. Here you will see that candle got rejection through zone area and a piercing line candlestick pattern formed. So now we have almost two confirmations. First confirmation is candle got rejection through the zone area. Second confirmation is we got a piercing line candle. So, after two solid confirmation, here we place a sell trade. A fundamental rule about reversal is that you have to have a short-term trend to reverse. An uptrend is defined by swing traders as 3 or more consecutive sessions, with each session opening higher than the previous open, and also closing higher than the previous close, higher lows followed by higher highs. A downtrend is the opposite, consisting of 3 or more consecutive sessions with lower opening prices than the prior, and closing lower, lower highs and lower lows. We won this live trade. I hope you will understand the concept of this live trading. You need to train your eyes. I suggest everyone please practice more and more before jump into the live trade and then start making a profit. I hope that you will like my strategy. Please like, share and comment, and don't forget to subscribe to my channel. Thanks for watching.